stocks you have gainers like Vodafone Idea up 13%. Sundaram Finance is up close to 10%, Federal Bank up 7%, Adani Green is up 6.5%, Chola Finance, Canara Bank, India Bulls Venture, a lot of financial names, not only from the benchmark index, but even from the broader markets that are participating in today's up move and actually leading the up move from the forefront, if I may add. Let's touch base with our guest on the show. We have Sandeep Raina join us from Edelweiss. He is the Associate Director of Research there. Thank you so much, Mr. Raina, for joining us last minute on the show today. Talking about the markets, do you believe there's enough room for further uptick in the financial space, especially the large cap lenders?
Oh yes, I think there is a lot of space because if I divide the market like Nifty and Bank Nifty, so barring the last 3 days, Bank Nifty has not done anything at all. It was stuck at 21,500 and 22,000 for many months now. And on the other hand, your Nifty was moving up, right? In fact, the entire movement of Nifty was without finance, which is like 35% of the Nifty weights or 32% now. So I think there's a lot of room left in financial sector, and see, I think what has happened is, if you would have seen in last 2-3 months, a lot of all these banks have come up with and have raised capital, which is an interesting one. Now all the balance sheets of all these players are flush with liquidity, right? That is one which is very important, because if the NPA comes in, the bank will be able to take over that. Second is, I think what market is also believing is, maybe the NPA problem, yes, we know it is there, but it will not be what we thought of because of COVID, so that will also curtail some bit because we have, the banks have also already taken so much of, provisioning. I think these are two factors which will lead to banking now doing well, and overall market is also interesting. Now, just to give you one more perspective, that Nifty has given you 3,500-4,000 points. Out of that, 55% of this rally has happened because of only top 4-5 banks, 4-5 company, which is your Reliance, which is your HDFC and few more. So that way, I think there is some room in banking, still more left. And a lot of small banks and NBFCs can be very, very interesting. Like you mentioned Chola. Like Chola has almost doubled from the bottom and still looking interesting, and still he is 30% down from the top. So it is still not closer to the top, So that is what we are looking at. Federal Bank is moving up, So there are a lot of HDFC has started doing well, and it was doing well before also. So Indus has started doing well. So all these banks have started performing in last 4-5 days.
Right. Are you, since you mentioned a few mid and small cap names as well towards the end, are you equally bullish on names which you just mentioned and from the broader markets essentially for NBFCs, HFCs, or even banks for that matter?
Yes, I am. In fact, HFCs are looking interesting, like companies like Canfin Homes. Now, like 90-95% of his numbers come from the salaried class, and I know the morats are increasing for most of these, but I'm saying still at these levels it makes an interesting one. In HFCs, they are like HDFC Bank. That is also interesting, because I think the problem, again, the same point I'll just again put, the problem what we foresee before, I think that is coming down significantly. Now people are saying, maybe those NPAs will not reoccur what we were expecting, and people have provided for. So HFCs are looking interesting. In fact, NBFCs are looking interesting, like Chola. I think CV cycle, which was looking very bad, and we are already down 60% from the top. Now the question is, how much more will go down? And that's also a question that everybody is asking in the market. So, they're saying, the further downfall is not expected, and it is kind of arrested. And at these valuation, you should buy. And the way to look at it is not to look at the price to earning or the price to book. The way to look at it is what is the number that company will do in FY22. What is the top they have made? Like let's say if you made a top of 100 today in PAT, I'm saying, and today you are at 40 or 50. I'm saying there's a big room still left just to go back to your normal level. From based on that, if you're cheaper, then you should be buying those stocks. And I think that is what is happening in the market right now.
Okay. I was just looking at the portfolio as far as the mid-cap fund is concerned. You've added a Lumax Industries. It's an interesting pick, given that there are a host of other auto ancillary space, ancillary stocks which are showing a fair amount of promise as well. Why did you pick Lumax, and what is the rationale there?
See, very interesting. What we need to see is an auto axe. Where is he supplying and to which models? Auto axe, if you see any company, generally they are 50-60% of the market share generally. But you have to see, am I supplying to a product in an OEM which is doing very well? Let's say if Lumex is supplying to, Maruti and in Maruti to Baleno. If Baleno is doing very well and supplying my product to them, then that is the one I have to buy. And for Lumix, that is the case because in lighting, they are the pioneers. They are doing very well because of change and shift in lighting. Their realization will move up and management quality is superior. So I think they will be able to get back all the lost revenues going forward and they will do very well. And the stock was very cheap. We added at closer to 1,000 rupees. It's at 1,500. We're still liking the stock. I think there is a lot of room and they will be adding also new products. Which is very interesting, and in auto hacks is very important. For that matter, in any companies, I have to make sure that I keep on adding new product where the competition is low and I have a superior product. So if I do that, then you should be buying those companies. So that is how the moats are being created for these companies.
Right, makes sense. But overall, what is your sense on auto and auto ancillary space, given the run-up that the stocks have seen and the heightened expectations ahead of festive season, and now the comments made by Finance Minister as well about revisiting GST prices for two-wheelers? Do you think they could finally catch up in terms of performance and in terms of the stock move?
See, I think auto has done fairly well. So you look at, Hero Honda or let's say for that matter, iShow, which is again part of my portfolio, then they have done very well. iShare was at 11-12,000. It is more than 22-21,000. The question what we need to ask is, will they come back to normal level in next 2 years rather? If the answer is yes, then I think we should be buying those stocks, right? And same is the case with iShare, same is the case with Bajaj and maybe Hero Honda also. And I think auto, for that matter, AutoX will also get that support because you are supplying actually to these OEMs. So we should be looking at the companies where the market share is higher. We should look at the companies where the profitability is higher. And one more thing I just want to talk to the viewers that very interestingly, cost has come down for most of these companies. So the way the curtailment has happened in costing across the board is very interesting, and I'm sure it will not come back very easily also because companies have found a way how to curtail costs, and that way the EBITDA margin will also improve. So it makes an interesting one for us.
Okay, fair point. What about white goods and white good maker companies? For instance, you have removed an Amber. If you could talk to us a bit more about the decision to cut back on Amber and the overall view on this space.
See, we are bullish on the stock. It's not that. So when you're managing a portfolio, you have to make sure that, you have something better which can give you more return. Now, Amber is already up like doubled in last 3, 4, 5 months when we added that. So it has already given us 70-80% return for the portfolio. Now, the question is, do you want to still continue with that? The answer there was maybe for the portfolio, I just want to wait because the stock has given a good return and it is now on the higher side of the valuation. But that doesn't mean I don't like the stock. The space itself is so interesting. Like what we're talking, outsourcing model in India will pick up thanks to Government of India initiative also and what has happened to our relations with China because of COVID and other stuff. Lot of manufacturing setups will happen in India and Amber will be the pioneer in that. And if somebody wants to hold Amber for a long term, we should be buying that. It is just that I think maybe for 2-3 months it can do a time correction. I'll further add that stock. But as a concept, this stock looks very interesting.
Right. Sandeep, when the markets fell significantly at the start of the lockdown, March and early April, and when there was some signs of revival trickling in, everybody was rushing towards large cap names because they were more reliable companies with a strong cash reserves, strong historic performance trends, etc. And now the frenzy seems to be towards mid and small cap names. How are you helping your clients navigate? Where is it that you see value right now?
See, that is the nature of the beast. When the market is in frenzy, it's but natural that mid caps start outperforming, and there's a reason for that because they have been beaten down more also, and there is a reason for that also. So very simply, your market moves on EPS and your price to earnings. So when market is not in good condition, the mid cap EPS fell more, right? It falls more, and also the EPS drop and the P drop is more. So that's why the drop is more on the market cap or the price of the stock. However, it works on the other way also because when the market starts doing well, I'm saying the economy wise, your EPS also starts moving faster and your P also moves significantly. So that is why you see a big rebound, and that is what is happening in lot of large mid caps. I'm not still buying the very small ones, but the largest mid cap in the range of 7 to 8,000 crores and upward of that, they are looking very interesting. And now in that the companies can be Trent or an Astral, where you see a lot of buying happening because you see that these companies can be even bigger going forward. And that is the reason why mid caps are doing. And I think we should still continue. And I'm not saying that we have to forego large caps. No, large caps will also do well, but the outperformance will happen in the mid caps. So that is my overall take on the markets.
Right. Okay, Sandeep, thank you so much for chatting with us this afternoon and sharing your views on the markets and different stocks and sectors as well. Moving on to ET Now Insights. August marked the third straight